The largest corporate proxy fight in history is taking place right now between Procter Gamble and activist investor Nelson Peltz, coming a week ahead next week. It comes to a head, rather, next week with a very critical shareholder vote. Trian Partners has taken a $3.5 billion stake in P&G and is seeking a board seat. And joining us right now to talk about it, Nelson Peltz, Trian Partners CEO and founding partner, and we're thrilled to have him here this morning. Thank you for coming in. So we have, Joe. We're like 72 hours before you're going to find out where we are.
Yeah,
a little longer than that.
A little longer than that.
So I made a lot of phone calls yesterday.
Right. And what are you hearing?
And on all sides, it seems like this is going to come down to the wire. I mean, truly close. I will tell you, even people who I would imagine will be on the other side of this feel that you've actually won to some degree, just given how close things are. That wasn't even expected when this began. Where do you think it is?
I'm not allowed to speculate. Those are SEC rules. But I would agree that it probably is going to be close. The closest one, I only have close ones. You know, Heinz was close. DuPont was really close. It was 46%. We lost the battle, won the war. And hopefully that'll be a big lesson for P&G as we go forward here. Let
me ask you a question. Obviously, hopefully, you will hope, I imagine, that you will win.
Yes.
If you were to lose, would you sell your stock?
You know, I get asked that question, and what I don't like the question, because I don't want people to feel, oh, I can vote either way, and he's going to be there. But there is a great story that goes along with that answer, and I referred to it briefly. At DuPont, we lost. We had 46% of the vote. And what happened is the stock the night before the annual meeting was 75. It went down to 48. 2 quarters later, Ellen Coleman took early retirement because we said at the annual meeting that we congratulated them on the victory, but if they didn't change their ways, the next quarter and the next quarter would be misses, which is what happened. They changed CEOs. We had an opportunity to spend time with the board, which heretofore we have not done at P&G. And we were very much part of the Dow-DuPont merger. You read the Proxy statement. Those meetings were held at my house. And they all worked out perfectly. And now that $48 stock is valued at about $110, given all the ins and outs and so forth. So it's a happy story. It was a rough ride, 75, 48, 110, and I hope we don't have to go through that same kind of ride. But the implication is
that you might hang in.
That's the implication.
And you might even do it again.
Yeah. Well, I said that at the DuPont meeting. I said, you know, if they didn't change your ways, they would see me again the following year in Wilmington.
Right.
This is in Cincinnati.
Let me ask you a question about David Taylor, the CEO of this company. When you first launched this contest, you were actually very praiseworthy of his leadership. Less praiseworthy of the company and the board's leadership when you look at the record from that perspective. Do you have a problem with David Taylor, who has now said some relatively critical things about you? I mean, the gloves really did come off over the past couple of weeks in this.
I think the gloves came off on one side. And I was praiseworthy of David Taylor as a person. I thought he was a gentleman. I think he was an honorable gentleman. I felt I could work with David. I still feel I can work with David. You know, we've had all kinds of these issues at Heinz. We won a proxy fight, but it was a very tough proxy fight. Bill Johnson, who was chairman and CEO prior to, during, and after that proxy fight, is now an advisory partner at Trian, and he was our appointee on the Pepsi board. So people do mend fences.
Nelson, you said that you were very praiseworthy of his performance and some of the things he's done. Why come in? I guess that's the basic question. Why come in? What are they not doing?
I wasn't praiseworthy of his performance.
Even though the stock has outperformed their peers.
Well, there's a reason the stock has outperformed, and let's talk about that. Prior to David becoming CEO in November of 15, the stock had dropped 31% versus the peers. David was running almost 50% of the company at that time. He became CEO, and the stock has gone up 24%. Peers have gone up 22%. So he, in effect, has captured 2% of the 31% lost. And somewhere in that 24%, Trian showed up, and I think we might get a point or two credit in that stock. But the stock today is where it was 4 years ago.
Should he be the CEO?
With me, absolutely. Trian always has a policy that when we get into a company, our goal is to work with the CEO. Our goal is not to get rid of the CEO. Ellen Coleman would probably be CEO today at DuPont had she given me a seat on that board.
When did P&G lose their way, in your view? I mean, do you think Lafley was great, did all the right things?
I think, Joe, that's a great question. You know, P&G was one of America's really great companies for forever. And what happened is a lot of these older companies, they want to fight the future. They don't want to embrace the future. Okay, it's great if P&G, which does $65 billion in sales, could do it all in Tide in one package. But that's not the cards they've been dealt. The moats around their business, owning shelf space, they're all down. I mean, those moats are down. People are buying from the PCs and their cell phones, and there's all these wonderful digital brands that have come out. And the millennial today, and I got 6 of them at home, so they're a weird lot, okay? They're lovable, but they're weird, okay? And what happens is that they don't trust big brands anymore. They want what's called my brand. They want a brand that they can have an emotional attachment to, a brand that's got a value proposition for the environment, for their body, outside, inside, on their hair, whatever it is. That's what they want. And what P&G has done, it sold 120 of these small brands. And these brands were bought. Every one of them was bought for the future of P&G. And now they've doubled down on global brands. And that's not the way the world is going. It really isn't.
So you think they should go back and buy up a bunch of brands and bring these millennial customers back in?
Well, they have to figure out the millennials, but the structure of P&G doesn't allow for them to work little brands because they have what they call 6 SMOs, which is 6 selling organizations in effect. The company does 60-odd billion in sales, so each selling organization does approximately $10 billion. You buy a brand like Method Soap, which is what S.C. Johnson bought a couple of weeks ago. It's in my house. I never heard of it, but my kids said, you got to use Method Soap.
We've got Method Soap in the Sorkin
I'm
household.
sure everybody around has got Method Soap. So Method Soap, let's pretend, does $200 million in sales. I don't know what they do. And let's say sales go up 15%, which is great. That's $30 million. You divide that $30 million by 6 sales organizations, that's $5 million apiece. That's a rounding error compared to Pampers and Tide. So it doesn't get the attention because the structure says that selling organization reports to corporate. It doesn't report to the brand manager or the head of the global business unit.
So what was your answer? When did they lose their way? Did Lafley? Did the next guy that became the VA guy?
I think they just lost sight of what's happening.
They brought Lafley back. He was like the return of the prodigal son because they couldn't figure out anybody else. Did that work? Were they still on track back then or not?
Well, Joe, it's a company that is so insular, everybody gets promoted from within. Unilever and Nestle in the last couple of years have brought in outsiders. This is a Dutch company and a Swiss company, has broken the mold. They've gone outside and brought in CEOs from outside. There's a human resource problem here at this company. They don't bring in the best athlete. They bring in who's available next stop on the ladder of corporate success there. And what happens is you don't get the best and the brightest. So they bring Lafley back because McDonald, I never met the man, but everybody said he was terrible. I can't defend him or have an opinion on it. And he has been blamed for everything, including global warming. So McDonald doesn't do the job. So
I think global warming caused him to become CEO.
You might be. Well, you got to explain that to P&G. When they're here,
when it was causing ISIS. I think.
Now, Nelson, let me ask you about this. This is what David Taylor says about you. He says that Nelson Peltz would seek to fundamentally change the soul of the company. He said, he's talking about you, that corporate R&D is a hobby. It is not a hobby. It's fundamental to our brands and the processes that make our brands. What would happen if Nelson Peltz wins this?
First of all, I think P&G has lost its soul. And its soul was growing market share more and more and more over the world. And today, for 10 years, they've been losing market share. When you're in the consumer business, you cannot be losing market share. That is fundamental. And when you're losing market share and you cut down advertising in the last quarter to make the numbers look, that's a cardinal sin.
Right.
You don't have to be a marketing genius to know if you're losing market share, don't eliminate advertising. You know, this proxy fight is probably the dumbest thing I've ever been involved in. It really is.
Because?
Okay, because in my opinion, they're spending over $100 million. Think about that. $100 million, all this sales and effort to keep me off the board. And I've said that if I come on the board, no one has to get off. I will nominate the man to come right back on.
Their counter is, why can't you give them ideas and be partners with them without being on the board?
No, that's not their answer anymore.
Yeah, that was their answer that they put out.
They're not looking, Becky, they're not looking for my ideas. First, I had no ideas, which was the bar you had to jump over to get on the board. Then my idea became a bad idea. And then they said, they're already doing it. So they're already doing a bad idea. They're not doing my idea. I've given them a great idea. I've given them a structure which holds people accountable, okay, which is what's lacking in the matrix organization.
Let me ask you this. If you make it, if you get on the board and you win, you'll be one voice.
Exactly.
Right? How powerful and influential can that voice be? I mean, is there the possibility that you get on the board and they try to freeze you out?
They put me in the corner with a dunce cap on?
Nobody puts Nelson in the corner.
I just don't. I'm actually very curious about the sort of just interpersonal relationship in terms of how that works. You've actually had difficult proxy contests, gotten on a board, and then had to actually win the group over.
I've never been more than 2 out of 12. I've been 1 out of 12. Look, once you get on a board, you will find groups on that board that are not all solidly in one camp. They have to look that way today. They all know that fundamentally they're there to represent the shareholders, not management, not history, not any of those things. And when I get on a board, I appeal to that. And all I ask them to do is let's have a real serious discussion about what I'm suggesting. And if you don't like it, let's hire a consulting firm, one of the top ones, and look at our structure. And I want that consulting firm to report to the board, not to management, but to report to the board. And really, I know us. Look, we have dealt with matrix organizations throughout my career. They don't work. They just don't work. It means complexity. That's the synonym for matrix. It means sales growth is slower, and it means margins are lower. That's what matrix does.
Okay, we're going to sneak in a quick break. Nelson Peltz is going to be with us for the rest of the hour, and we've got a lot to talk to him about.
Fascinated about the consulting group. I don't have a great impression of the consulting groups in general.
Well, I'm going to tell you why you're right. Is this water okay for me?
That's water for you. It's okay. We had our tester.
I know you were mad at me. Joe was mad at me.
We had a tester check it out earlier.
I mean, I watch the CEOs that come from consulting groups, and they make McDonald look like, Jack Welch.
Let me tell you what happens.
Well, let's have that
conversation after the commercial break.
No.
McKinsey? Seriously? McKinsey?
Welcome back to Squawk Box this morning. We want to continue our conversation on the biggest corporate proxy fight in history. Nelson Peltz is here, Trian Partners CEO and founding partner. I want to ask you about the markets and where you think we are, but I wanted to ask you this. Given this proxy contest, if you win this thing, do you think it truly means that every company in America is up for grabs? I mean, there had always been a sense that there were certain companies that were off limits given their size.
Andrew, let me tell you, over the years, we have all seen a huge transfer of wealth from the public sector to the private sector with the LBOs. And what happened at those LBOs, besides the leverage, clearly that juiced returns. And we're not suggesting leverage. But you know what really happened at those companies? on the board and management, there was an ownership mentality. They ran those businesses and they oversaw those businesses as if their entire net worth was tied up in that company. That's not what's happening today. And these big companies, heretofore, have been unassailable, as you've said, by private equity or anybody. And maybe I'm a pioneer, and maybe I will maybe I'm tilting at windmills. But even though we lost the DuPont proxy fight, I think it was obviously very good for DuPont and DuPont shareholders. And I think that today, P&G will never be the same company it was 2 months, 3 months ago. It will not be the same. Now, if I get on the board, the speed of that change will increase. If I don't get on the board, that change will continue to happen, but it just won't happen as fast. Look, I said I wanted to get on the board with 1 seat. They said no. You know what they said 3 days ago? They said they're now changing 3 directors. I said, you don't have to change any directors. I'm willing to come on the board. Everybody stays. But no, I can't come on the board. But now they've got 3 new directors to come on the board. So they're refreshing the board. There's not one CPG guy or woman on that board. Not one. And if you look at some of the charts we sent you, the TSR of those directors, starting at 17 years of tenure until Ms. Chang, who came on a few months ago, except her, the TSR versus the peers, every one of them is negative. Every one of the directors. Right. I mean, think about that. You can be on the board 17 years, and for 17 years, your total shareholder return is less than the peer group, and every other director on down the line. That says something to me. That says something that board has got to get more
But what
active.
it does also suggest is you want to change the board ultimately.
No, they're doing that. They're doing that. Yeah, I believe in board refreshment. There's no question. Everybody does.
They talked about trying to hire board members that have digital experience, international experience, healthcare experience. Do you think you would fit those 3 categories?
Hey, look, I'm pretty good on my iPhone, Andrew. I get stuff done, you know, but I think my real experience is in CPG.
Right.
Okay, and there is nobody on the board today with CPG experience.
Nelson, just a philosophical question. So Trix, you know, they changed. They're selling kale flavored Trix or something, and you know, fake coloring, or the coloring is all natural and everything. They finally said no one's eating this crap anymore. They're going to go back to the way Trix used to be, with sugar and red dye #2 and everything else, and sales are going to go. Are you sure that P&G needs to embrace every new age trend? I mean, they've been around for how many years? Sticking with what they know. They got to go to Method soap because the millennials are buying $100 million worth of this crap. What is it? I don't even know what it is. What is it, Andrew? What is Method soap?
Method soap is it's just a brand of soap. But it's a new,
what is it? Non-GMO or gluten-free soap?
It's ostensibly organic
so
soap.
they have to do every Whole Foods type thing?
No, they do not have to do every whole thing. But if you're in business...
Why can't they stick to their knitting and what made them successful?
Joe, because what they're doing today is losing market share. Okay, you know, you can stick with it.
You can't jump on every millennial trend.
No, that's what's called judgment.
Would you know how to satisfy millennials? Do you have the answer to that? You better bring in McKinsey.
Maybe I got 6 of them at home and 2 Gen Zers.
I have no idea
tell you something.
how to set.
The problem, I mean, if you look even like at a Pepsi, who just came out with earnings this week, they have suffered with the traditional beverages, and they've been bringing out all these new things that are designed to appeal to the millennials that are very different. But they're now admitting that they're going to have to shift some of their resources back to the old brand stuff so that it doesn't die a slow death. It sounds like all of these companies are facing an existential crisis, no matter which way you try and address it.
Sometimes you make a story up for what happened, okay? I don't want to get into Pepsi. I was there once. I've got to put a very talented guy on the board, Bill Johnson. I will talk about millennials. No one has the formula, and no, you do not jump on every fantasy that comes by. But you do understand trends, okay? And you do understand that these millennials are rejecting global brands. Does that mean you stop selling Tide and Pampers? Absolutely not. but you've got to sell them other things. Otherwise, you will continue to lose market share.
It's a pretty delicate balance, right?
What's that?
It's a pretty delicate balance to try.
It is a balance, but in order to accommodate a small brand, you have to have the structure that accommodates that brand. They don't have the structure today because of that matrix.
I'm hoping millennials come around, move out of their parents' house, stop looking at the electronics, start living, life.
Joe, like I said, we have to embrace the future and not fight it,
Make them move to you. They might even get jobs. They might, there could be.
Don't go to hell with yourself.
Nelson, I know you're not a micro guy, but a stock guy, an individual corporate guy. But where do you think we are in the cycle, in terms of the economic cycle? We're going to get the jobs numbers at 8:30, and where we are in the where the stock market is right now. That has to figure into some of your thinking, I imagine.
It does. Look, I think that the economy is much stronger than any would have anticipated before the election.
Right. I know.
Okay.
I'm with you.
And I think it is. And I like the fact that the dollar is weakening.
The last 8 years, in terms of the government's response to business, was not friendly. Am I overstating that?
Hostile.
Hostile, thank you.
It was a proxy fight.
Right. Which makes a lot of sense when you're trying to create jobs.
Exactly.
Let's attack the corporations.
Exactly.
Makes a lot of sense.
But what we have today is we have the dollar weakening, the economy getting stronger. I don't understand why they want to have 3 interest rate increases this year. We owe a lot of money. Why do we want to pay more interest? Why do we want to make the dollar stronger? I think things are just fine the way they are.
But you look at corporate earnings right now. You think comps come next year going to be okay? Better than okay?
Multiples are very high today.
Right.
Okay, and multiples are high, in my opinion, because of interest rates. When you have a stock that's paying 3-4% dividend, and where you can put your money today, that's amazing. Right. But if you're going to continue to raise interest rates, you might sour the market, or at least those stocks.
Right.
So it seems like a reasonable place. Valuations are high, but reasonable given the circumstances.
Right.
And we'll see what happens.
What percent of your portfolio is in activist positions versus sort of broader calls, either on the market?
100%.
100%.
100%. We have 8 positions.
And that's it.
That's it. And we're on board of 5 or 6 of them.
Right. The reason I ask is a number of other people who are so-called activists have their activist portion of their portfolio, and then they have another portion of their portfolio.
I know what I know. I don't know what I don't know. I don't know how to pick the market. I do know how to make companies better. I spent the vast majority of my career not staring at a Bloomberg screen and not picking stocks, but building businesses. As you know, I ran and built a Fortune 100 company in the 80s. Right. And then we sold it for the benefit of all share owners. I turned around Snapple. I have some experience in doing these things. I love the consumer space. And I only became a fund about 12 years ago.
Final question. This is the biggest proxy contest you've ever pursued thus far, and the biggest in history now. Do you have an elephant with a target on its back that comes after this one?
Look, we're looking at a lot of opportunities, clearly. I can't tell you that we've settled on one right now, but we are looking at them. Look, these companies are amazing companies. They generate gobs of cash. They generate gobs of unnecessary expenses as well.
Wait. I know we got to go. So next week, when are you free to come on? Squawk Box.
Next week, let me tell you something.
I've got a calendar open right here.
Okay.
I'm booking you now.
I will come on in the next month. Here.
You'll get up again.
I'll get up again.
Wow. Okay.
Right. For you, Joe. For you.
That's all I'm asking.
For you, I'll come back.
All right.
Okay.
We have a tape of this.
I know we do.
All right, good. Nelson Peltz, thank you for spending a half hour with us.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.